Hey everyone, welcome back to Corporate Decoder, the place where we decode all those corporate filings so you don't have to. This time we're diving into Maravai Life Sciences proxy statement. Think of it as the annual shareholder report, packed with info on everything from director elections to executive pay. It might sound dry, but trust me, there are some juicy bits in here, especially when it comes to how much the top dogs are making. Ready to see if it's feast or famine at the executive level? Let's get started. First off, this is a Schedule 14A, which means it's a proxy statement filed with the Securities and Exchange Commission. Basically, it's what shareholders get before an annual meeting to tell them what's on the agenda and how the board recommends they vote. Maravai is holding their annual meeting in May of 2025. The letter to shareholders mentions the main topics for the meeting: electing directors, ratifying their accounting firm, and that non-binding vote on executive compensation, better known as the say on pay vote. It also explains how shareholders can attend virtually and vote their shares. This say on pay vote is basically shareholders giving a thumbs up or thumbs down to how much the top executives are getting paid. It's non-binding, meaning the board doesn't have to listen, but it's generally a good idea to pay attention to what the shareholders think. It gives a company a sense of how its shareholders feel about the direction of the company. Moving on to the board of directors, shareholders will be voting to elect 4 directors for a 3-year term. The filing lists all 11 members of the board, their ages, positions, and when their current terms expire. The document mentions a director nomination agreement with GTCR, which is a private equity firm that has significant control over the company. This agreement gives GTCR has a big say on who gets on that board. The document then describes the procedures for shareholders who want to recommend director nominees or submit proposals for the 2026 annual meeting. Basically, if you want to get your voice heard, there are deadlines and specific requirements you need to follow. The board has an independent chairman, R. Andrew Eckert, and also outlines how the different committees operate and what their responsibilities are. The company has 3 committees, each with a written mandate: the Audit Committee, the Compensation and Leadership Development Committee, and the Nominating, Governance and Risk Committee. These groups focus on various topics such as financial oversight, executive compensation and ethics and risk management. Let's take a look at the executive officers. The report mentions William Martin as the Chief Executive Officer, as well as Kevin Hurd as the Chief Financial Officer, and Peter Leddy as the Chief Administrative Officer. It also lists Christine Dolan, Rebecca Buzeo, and Kurt Rorschach as also having key roles. Now for the part everyone cares about, executive compensation. This section dives into the details of how the company pays its top executives, including the why behind the what. The goals are to encourage executives' reward performance and align their interests with long-term shareholder value. The key components of executive compensation include base salary, bonuses, and equity awards like stock options or restricted stock units. The idea is to create a mix of guaranteed pay and performance-based incentives. The Compensation Committee also uses a peer group of similar companies to benchmark executive pay and ensure it's competitive. They want to attract and retain top talent. The 2024 salaries increased for all the top executives, and the value of the equity awards was valued at a lower rate than in 2023. While salaries went up a little, overall compensation was targeted to be lower so the company can save money. The report goes into a summary compensation table, and I will highlight the changes from 2023 to 2024 of a few of these members to get a good sense of compensation changes. Councillor William E. Martin from 2.3 million to 6.4 million, Kevin Hurd from 2.8 million to 2.3 million to 2.4 million. So the CEO, William E. Martin, got a pay raise of around 4 million, while Kevin Hurd and Peter Leddy lost around $500,000 each. In effect, the top dog made much more money while his peers lost a significant amount of theirs. All in all, we can assume the CEO performed to the committee's expectations, while those other positions did not. The advisory firm Meridian looked at compensation practices to make their recs. Demand dropped off for COVID products, and so the company was benchmarked to their peers again. The company's executives are prohibited from hedging and pledging their stocks. This is for obvious reasons. So that company insiders will not profit even if the company they are insiders of does poorly. As a reminder, the board recommends that you vote for the election of the director nominees, the ratification of the accounting firm, and the approval of the executive compensation. Now, let's briefly touch on some related party transactions. These are deals the company has with people who have close ties to it, like major shareholders or board members. The tax receivable agreement with MLS2 is a big one, involving payments based on tax benefits. In 2024, they made payments of over $7 million. They made payments of over $7 million under this agreement, which seems to benefit insiders quite handsomely. This section lists the amount of shares held by each major beneficial owner. GTCR holds more than 50%, BlackRock roughly 4%, and Vanguard roughly 4%. The top positions make up most of the shares. They have policies around related party transactions with the audit committee, reviewing all transactions. They do this to ensure nothing is out of line and that the insiders aren't making deals that end up hurting the company and therefore shareholder value. The company paid about $132,000 to Courier Global, a company affiliated with GTCR for contract manufacturing services, and Courier Global bought $45,000 worth of products from Maravai. This is important to disclose since it allows for insight into transactions between the company and its executives. So, what's the big picture? Maravai is navigating a changing market, and they're trying to balance rewarding their executives with keeping shareholders happy. The reliance on private equity firm GTCR is a key factor, as they have significant influence over the board and decisions. There's some risk here, and as COVID-19 fades into the rear view, the risks are much more prevalent. That said, with no real red flags, the company may be worth a deeper look based on its potential. Thanks for tuning in to Corporate Decoder. Be sure to like, subscribe, and leave a comment below.